Hey, good afternoon. This is Mayor Walensky with Driving Markets. Obviously not driving at the moment. Okay, so let's have a catch up of where we're at. So today, Wednesday, the 26th of July, you've got the Fed meeting coming out. By the time, obviously, I'm broadcast this, then the note could come out and the decision, likely we're going to have a 25 basis point rise in the Fed rates, going up to 5.25 to 5.5%. I've got a sneaky feeling that there could be another rate rise come the end of the year towards September, October. Not too sure, but the market's anticipating a rate rise now, and that's more or less it. Now, it's quite important that everyone is aware that these rate rises have not killed inflation. So inflation is still there, even though it's trending down. It's still there. So we've had significant rate rises, but the impact has not been what it should have been. By this time, which is a year and a half later, after those rate rises, then inflation should be around about the 2.2, 2.3%. But core inflation, even though trending down, is still high. And that's going to be a concern to the Fed and the other central banks, because core inflation globally is trending down, but not going down fast enough. And they're concerned that if inflation or if interest rates don't have the impact on inflation that they're supposed to have, then we're going to be in a potential stagflation economy where you've got price rises and you don't have growth in the economy. And that is a real danger. Not there yet. However, small businesses are feeling the crunch and they're feeling the pinch in their pockets where volumes are lower, and they're going to end up having lower amount of sales, low amount of profitability. So there is a concern there that interest rates have not done the job. They've gone high, they've had a major impact on homeowners, a major impact on businesses, but they haven't done the job that they're supposed to have done, and that is a concern. Moving on to another topic which I want to mention is the BRICS. Now, the BRICS is the Brazil, Russia, India, China, South Africa alternative currency that wants to be set up to counter the US dollar. So what they're trying to do is they're trying to be a de-dollarization in the world. As countries, especially emerging economies, are looking to move away from dependency on the dollar. One of them, Saudi Arabia, by the way, which is not emerging, but they are emerging out of the 16th century. One of them is Saudi Arabia, and they're also looking to de-dollarize anything to do with petrodollars or the economy. Now, this BRICS gold-backed alternative currency, whereby China and Russia are buying huge amounts of gold in order to make this BRICS currency the number one reserved, or the number one gold-backed reserve currency, is there to challenge the US dollar. And the question is if they'll be successful. Now, with more and more emerging countries, and especially African countries, joining the BRICS consortium, there is going to be a lot of power, a lot of weight towards countering the US dollar as the number one reserve currency. The things you have to be aware of is that if they do overtake the US dollar, which I found unlikely, but that could happen, do you depend, or can you trust China and Russia? And that is a big question, whether they can be trusted. We all know China tells lies, and we all know Russia will do things in a more dictatorial or authoritarian basis. And therefore, there is a degree of nervousness there that if you're going to be holding one of the coins or one of the currencies of the BRICS reserve currency in the time that you have to test out getting that money converted back into gold, would that really happen? Or is it just going to be another political economic move to get the dollar weakened and for China and Russia to become the number one as far as reserve currency is concerned? China does have its eyes on the US to overtake the US, but China itself is running into difficulties. Its local economy is not working well. Its property sector is in a dismal, shocking state. And yet China keeps on trying to pump in more and more, hundreds of billions in stimulus, and it's not getting the economy going. So there is a good possibility that China, by year end, instead of having 5.5% GDP, you could see China down to 2% GDP. Moving on to another topic in the Middle East, which could be of interest, is Israel. Israel is a high-tech hub, and they've just passed some judicial reform, which I personally think is good, and they do need to reduce some of the reasonability tests with the judges. But the global markets and the FX markets don't like it, and they think that's taken away more of the democratic move, what's going on in Israel. And you see that the shekel has weakened significantly. It's one to follow, because you could see the shekel weaken against the dollar all the way to 380, 390, and against the pound down to around about the 4 again. It's running at 470, 478. It could be running at 490 to 5 shekels to the pound. That would be weaker for the pound, and that could push inflation up in Israel. It's an interesting one because Israel is also the center of geopolitical tensions with Hezbollah in Lebanon and Iran planning or building a nuclear weapon, which they will use against Israel if they got one, God forbid, but that's what would happen. And there, if that was to kick off, then obviously you would see globally oil prices shoot up and markets go down. So that's a small fringe geopolitical issue that you've got to keep an eye on as regards FX and as regards commodities. Moving on to general markets. Markets are overbought, overvalued. However, who am I to say that they're going to go down? I personally think there's going to be a short-term pullback on markets with a bit of profit taking there. And you're going to have the Nasdaq come off slightly and maybe the Dow. However, the Dow has gone up for the last 12 days. Maybe it's gone up again today, 13th day. It looks like it's never ending. However, you can expect a correction in financial markets short term, not necessarily a crash, short term correction, but I'm looking for a significant downturn in 2024 as unemployment rises and more companies go bust as a result of the interest rates and the slowdown overall in the economy. We are going to continue being lied to as far as the Fed's concerned, as far as central banks are concerned, and the US Treasury. We're going to continue being lied about the numbers. However, take into account the economies are slowing down. Anyhow, that's it for now. This is Meir Walensky with Driving Markets Broadcast. You can share, subscribe. Catch you later.